Andrew?
Yeah, I think actually if we look at this whole idea of percentage of the economy that is services, it's not hugely helpful to look at just percentages, because I think if we want to move to a higher income economy, I think that the important thing to do is just look at what else we need to do, rather than, you know, what percentage should be services, a high percentage, and how we're going to get that. I mean, the sort of quality of life that higher income economies have is just very different from where we are today. And, you know, I think we need to have significantly more investment and spending in areas like, for example, transport, public transport, in areas like healthcare, in areas like education, perhaps a more efficient public sector, that sort of thing. All these things are the sort of things we need to look at in order to get there, rather than look at percentages and what growth rates we need to get. I mean, if the 8% or any other percent growth rate comes from a specific sector, it might not be a wrong sector. You know, it might not be particularly helpful for the rest of us. Yeah.
I don't think we should aspire to be like the developed world too much. You know, in fact, if you net out the American middle class, if you net out their debt, they're not middle class, they're just plain poor, you know, and that's what the world is finding out, that these guys, without this ridiculous level of over-leverage, they're not that rich, you know, and they just happen to be availed of a mortgage for a $500,000 house without any track record or wage slips paid in or anything. So I don't think we should aspire to that. But I think there is a danger that we get too comfortable and just say, oh, well, the government will always keep prices at this, therefore no real benefit for working really hard, but there's no real downside if I don't do much. That's the wrong attitude to instill, and I think the government understands that.
Well, with that sobering note, knowing that we have to sort of reach about an 8% GDP for the next how many years, do you gentlemen have any bets on what our GDP numbers are likely to be? I know you don't like forecasting very much.
No idea.
But MARC, Mark, has changed their 2009 GDP forecast to 3.8% contraction as opposed to their previous of 1.5%. That's quite huge. Do you have any bets of your own?
Well, for this year, we are actually looking at the economy to contract by 3.8% as well. That's our forecast currently. Obviously, second quarter GDP numbers turn out to be better than expected, and we think the momentum will continue. I think the quarter-over-quarter expansion will be sustained for the remaining 2 quarters of the year, such that by end of this year or final quarter of this year, we should see small growth in GDP. I may want to, revise the full year number to slightly smaller contraction, but not by much. But then again, I think for the next 10 years to achieve 8-9% growth per annum, I think it's going to be very challenging. I mean, to be honest, let's look at the situation that we are in right now. The global situation itself is highly uncertain. Global economic growth, to me, will probably be below long-term trend of 3.5%. Maybe we'll look at 2 to 2.5%. So that in itself is going to pose a challenge in achieving 8 to 9% growth. We had that before, but that was on the export-driven model when the global economy was also doing pretty well. So, I mean, it's going to be challenging, but at the same time interesting to see what are the strategy that the government going to come up with through its new economic model.
Andrew, do you want to add anything to that to round things up?
No, I don't think so. I think Suhaimi has got it all mentioned quite well. I think a great deal does depend, particularly in the next couple of quarters, on the ability of government to get out the money that they say they're going to spend, in the fiscal stimulus. We have been promised quite a lot of awards of various infrastructure projects and so on. And I think that is in the pipeline, but it's not out yet.
Jerry?
I'm not quite sure, when you really think about it, that maybe we could achieve 10% growth per annum in continuity, but we could wreck the country at the same time and make it a sort of ecological disaster area. We better be careful what we're wishing for. And you know, services generally aren't very pollutive, actually. You know, we could actually tell the world that we will recycle all nuclear waste throughout the world in Port Klang and Port Dickson, but it'd probably be very good for the GDP. It wouldn't be very well. The beaches in Port Dickson aren't great anyway, are they, really? But it wouldn't be very good for the environment. So I think developed status is not just about a number of GDP per capita.
But realistically speaking, does your company have their own forecast for this year?
No, we don't. No.
No? Okay. All right, so we'll just stick to Maybank's very sober 3.8%. Thank you very much, gentlemen, for your time today. Thank you.
Thank you.